So our survey identified that there's an increasing challenge for the retail and digital banks from the new startups, the fintechs, and the innovative new banks. And what that means is they've got to adopt these platform models in order that they can collaborate and work with new startups, bring new products to market quicker, provide the agility that they need to operate. What that means is that it affects the core operations of the bank. It's no longer about having the best website. It's about having the operations and services and the technologies to enable them to connect to other organizations, to use data effectively, and to build the models that will enable them to compete in the new marketplace.
It wasn't explicitly stated, I don't think, in the report, but is the message here ultimately that the banks will continue to shed jobs and replace those positions with more technology?
So the banks are under increasing cost pressures due to the environment. There is different challenges in terms of the way people operate. So as you see from the survey, people are more comfortable using online services. So our report last year found that there was still a need for operating in complex interactions with branches. But I think what's happened in the COVID crisis is that people have had more acceptance of the online services. So we're seeing an increasing urgency for digital transformation, which means that there will be new services delivered in these digital channels, which ultimately means that they'll have to respond to the cost pressures that they have. And as you see, you're seeing a number of restructuring programs going through the retail banks at the moment as they try and address the cost pressures that they need to operate in. The startups they're competing with have much lower cost ratios, and therefore they need to operate in a different model to compete effectively.
Cliff, I just want to get into the position of some of the big European players. It feels as though the bigger the bank, the bigger the challenge, because most large banks came together using cobbled IT systems. If they acquired another entity, they acquired another IT system. So to bring these all onto one unified operating system, it felt as though it was going to be costing more than $1 billion for that upgrade. What are we talking now as we see these companies try and move towards platforms? What are the banks having to pay to upgrade those systems?
So I think the banks have moved away from these large-scale one-off platform programs. The appetite now is around progressive transformation to modify the back-end systems, to simplify them, and to evolve to a position where you can start plugging in the smaller platforms and creating an environment where you can get value progressively. So I think the appetite for these big one-off programs is diminished because in principle you need to see the value and compete next year, not in 2 or 3 years' time. So those evolutionary programs are the way we're seeing the programs happening at the moment. They clearly still, as you say, that some of the programs in the past have been in the billions, but in principle now we're talking now about programs that are incrementally delivering value in a more agile way, where we want to see some services in 3 months, not in 3 years. So I think the model of the programs is different because of the need to compete now and not in 2 years' time, which means that each technology innovation has to address something new in the marketplace, which is where you see the collaboration model. So we have this concept around OpenX or Open Exchange, where we see banks being able to collaborate with third parties and to bring new platforms quickly into play to deliver those innovations much more quickly than traditional large transformation programs.